Hello everyone and welcome to my morning report chart appraisal videos with me, Richard Perry, market analyst at Hantec Markets. On Monday the 2nd of July, we've got pretty much risk off across the board today. What we have had is a move back into safety, which is pulling treasury yields lower and bond yields across the board pretty much, and that has been driven by the move to, let me get the right chart going here. That has been driven by the announcement over the weekend that the coalition partner of Angela Merkel in Germany, from the CSU, has sort of threatened to resign, a chap called Horst Schierhofer, and he's threatened to resign over the migration policy that Angela Merkel has brought back to Germany from the EU summit, and this sort of is causing sort of certain big sort of fissures running through the coalition partnership, and could ultimately, if the worst comes to the worst, actually result in Angela Merkel being brought down as Chancellor. So this is potentially a political risk being driven through the euro. And subsequently, we're getting the euro down. We're getting the German DAX being sold off. Although the DAX is nowhere near as bad as it was earlier on. It was over 160 60 ticks down at one stage, and it's clawed back over half of that. But the pressure remains to the downside, and it will be interesting to see how this political issue develops in Germany now. But there's also been issues surrounding trade tariffs over the weekend. Canada and the EU are both sort of looking at trade tariffs or increased tariffs on the states, yeah, it's certainly not helping to drive risk sentiment today. In terms of the PMI data, because it's the first of the month today, or first trading day of the month, so you've got the PMI data. And the PMIs have been okay. I'd say they're a little more than okay. The 51 on the Cajun manufacturing PMI is not great for China, but you did have a reasonable number out of the UK, which was, I suppose, a positive. The Eurozone final manufacturing PMI pretty much in line with expectations there. So we're looking out towards this afternoon and the ISM data. For the States, 58.1 down 58.7, so still a pretty strong number that is, isn't it? If it were to be achieved. But generally speaking, we've got a stronger dollar across the forex majors. Dollar is actually outperforming across the majors. Little bit of support coming in for the yen, but other than that, we're pretty much down across the board, and dollar strength is driving the gains today. That dollar strength is also playing out in the gold market, where gold is again dragged lower, $4 down, back below 1250. And it all sort of looks fairly much as though risk appetite is receding still, and volatility is higher on equity markets. The other move has come in the oil markets, whereby oil prices started off the day lower, and that's come as Donald Trump seems to sort of try and be influencing the OPEC decisions, and seems to be leaning on Saudi Arabia to increase production, and that is apparently what they're going to do. So subsequently, oil price is lower today. It'll be interesting to see if this starts to induce a bit of profit taking. So, as I said, item manufacturing this afternoon is pretty much the only real bit of data we now look forward to today. But my chart today is Euro Canadian dollar, which has been in this uptrend channel. It's had 3 sharp days of correction. Friday was a volatile day, wasn't it? A bit choppy, a bit up and down, but closed marginally higher on the day. But it's basically back towards a confluence of support on Euro Canada. This rising 21-day moving average, which had been supportive back in January, February, March, then resistance through April, May, and now having sort of turned up again is supportive. So that is an indicator to look out for. The sort of slight loss at the open has now started to sort of break this trend channel to the downside. It also sort of back around this support. You're sort of in a support range, I suppose, 15.315 up towards 53.60 support range. sort of back in the middle of that support range now. But I think a close below 53 figure would suggest we're sort of breaking down all these support arguments, and also look at the MACD lines on the brink of crossing lower. Stochastics following RSI at around 50. So this is, I think, at a bit of a crossroads now, and there's something to watch. If it continues to sort of drop away, close below 53 figure, I think that suggests pressure is on to the downside and renewed correction. But the bulls are having their sort of real test at the moment. Here you got the hourly chart. Not a huge sort of the slight negative bias to momentum, but not hugely, seeing as the RSI has held up above 40 recently. Just very slight negative bias near term, but moving averages are falling on the hourly chart, so that does still suggest that rallies are under pressure. You've got this little bit of a pivot around 54.40. Also overnight we've had sort of 53.60 starting to come in as resistance, and that 53.60 is the old neckline, so that's not a great development either for the bulls. So it is pressure that it seems to be growing still on this, and a close below 53 figure I think would sort of confirm that move. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.